All right, let's talk about weekly profiles and intraday profiles for January 2024. So easy profile reads and hard profile reads will happen, throughout the life of a trader. And you're merging always London profiles into New York profiles. Now, there are only 4 or 5 if you want to include seek and destroy London profiles, and they're summarized very simply into 2, either a delayed protraction or a normal protraction. New York profiles, there are 6, but really there's only 3. 3 of them have AM rallies, 3 of them have AM declines, but there's really only 3. There's a continuation, reversal, or consolidation. So as you go through this day, for example, this is a pretty easy profile read. So we start off with Asia. We take our 4 possible profiles, and the seek and destroy is the 5th profile where both sides of Asia are taken before you even get into New York. So if you don't see both sides of Asia being taken before getting into New York, then you're only looking at one of 2 profiles. And it sounds really simple, but it's definitely taken like a year of study just to get to a comfort level with profiles. So we see the Asian consolidation, usual stuff, 8 to midnight, and we know that it's this profile because price ran lower, and we're using ranges. We're always, ICT methodology is always using ranges. We're always using some form of high or low to define our premium discount and 50%. We're always using some form of high or low to define when is our range broken or when are we back inside of a range. So it's the same methodology. We're going 8 to midnight, midnight to 8:30, and those are capturing both the Asian range and the London session range. So you can see from the profile, the Asian range consolidates, and we're looking for a rundown somewhere around 2 a.m. New York. So we get our rundown, and at around 2 o'clock we continue to move down, but then we consolidate. We consolidate, we have a moment of manipulation, coming above that consolidation. We come back to the low of the Asian range, which you anticipate in this profile right here. So right around London, we are looking for a move back up, but not higher than either the midpoint nor the high of London. So if you look at that London open there, and let's just plot this so it looks visually the same. London open. This area is where we're saying we're not anticipating price to have any real, push back above. So we're framing everything around where is Asia for London, and then where is London for New York. So we see here that Asian consolidation, we have a rundown. This movement here gets slightly shifted in time because you'll see that we have this run up here going to just about the base of Asia before we have a displacement lower. And so that's what we're seeing here, this run up just about the base of Asia before we see a displacement lower. And then in New York, we're anticipating a high to be formed going into that displacement leg, some market structure that stays within this range for New York, and then we're going to run lower into the London close, and we are looking for some sort of kick up right around noon. So these profiles, there's so much information just in this diagram. Like even the gap between London and New York is relevant information. So we see that here. We see that run up to the base of Asia. So going into New York, we're anticipating price to be running down until London. But because this profile does not have anything beyond noon New York, we have to shift gears into the New York profiles. So at this point, we are anticipating some sort of bearish move, at least until around noon. So when we get into New York and we plot our 9:30 open, and we're seeing price will make that move down, make a move up, create that AM range high. That AM range high is this area here. So now we shift gears into a New York profile, and we do the same thing, just like we were doing for the Asian range high and low, the London high and low. We do the same thing for New York AM high and low. So the AM high and low gets formed, and we're anticipating anytime price is starting to come into close to or close back below 9:30, consolidation profiles are on the books. So we see here price does a New York lunch where it takes the low of lunch, comes back above into some form of an array, makes a push below the AM range low. Once we see that push below the AM range low, we're expecting price to get back to or around the 9:30 open. So AM range high, AM range low, AM range high, 9:30 open. We see price reacting to it. We're already anticipating bearish movement. We're waiting for price to come into some area of this displacement leg range. So we get to just above the 50% of this range with that push up. And then once we start seeing the displacement lower, we go down to a lower time frame. We find our run above buy side. We find our 15-minute or 60-minute PD array. We can see this run up right here gets into this order block, and then price will get below the AM low. So we've just merged the dynamic expectation of a bearish movement. Even if there are retraces, we're simply looking at the bearish movement and we're framing bearish runs at least until noon. And we're using the context of the AM session to frame what we're expecting in the PM session. So price does that, it runs below the AM low. We then see price come back above the AM low. So we're looking for that reversal. We get our order block, we run that, and we get back to 9:30. Easy read, easy read. We have the bias already given to us from Asia and London, and then we see our action in New York. Let's take a look at a more difficult read and things that we can use even on a higher time frame to help us with a process of elimination. So we always start with our Asian range, then we're looking at our New York open. Now we're looking at one of two things, right? So we're trading in New York, so we're waiting until here. So with this information, we're filtering out of the 4 profiles, 5 if you include seek and destroy, but of the 4 profiles, what are we seeing? Either a protraction or a delayed protraction. And that is the simplest way that I have found to filter London going into New York. So if you're a London trader, you're looking at the Asian range and you're looking to see if there is a protraction or a delayed protraction. So a protraction means that you're just simply making the moves up through London. If you have a delayed protraction, price will delay by going a Judas swing down before going up, or conversely going up before going down. So protraction versus delayed protraction. Is it happening in London or is it a delayed protraction in New York? So in this sense, we're looking at Asia and we can see that price through London is making no dips below the Asia low, which is what we would anticipate with this type of bullish move. So this bullish move through London will see an aggressive run, and then just before New York open, we'll see a retracement into that bullish leg, retracement into the bullish leg, and then lows will never be challenged at least until noon. So lows are defended. There are no swing lows that get challenged. If there's a mohawk or a sweep below it, we're just re-entering and we're keeping our bias bearish. The challenge on this day was that this 8:30 news event kicked off with this rapid swing high and low. And so before or as we're getting into 9:30, we're anticipating this to maintain a bullish momentum, but we're not expecting to see any of these lows really getting challenged. So when we get into that opening range till 10:30, we already see that lows are getting challenged. They're getting swept. We're staying at or around the 930 open, so that's this black line here. So what is going on? Why we would convince ourselves to be going bullish? Conversely, we could be thinking, just like in yesterday's price action, is this action of going above Asia just pushed forward because of the 830 news, and now we're actually going bearish and we're going to challenge the lows of Asia. So let's take a look at what New York does. New York does, in fact, take the AM low, and it was an aggressive run, and the high was never challenged. So that AM high was not challenged and the AM low was taken. But you have to zoom out. You have to remember, this profile is only validated for continued bearish movement if you get below London, which is here, so in this time window of New York, and if we get below Asia, and you should be below Asia going into New York. So let's break this down. Asia's low is all the way down here. New York open is still above Asia's low. So while price is going aggressively bearish all through this section of the AM session, because or until price gets below London or Asia, we're still bullish. All of this, as aggressive as it may seem, is really framing up a bullish move off of this price action. So we're merging profiles and we're looking at the London session going into New York. We're trying to determine, are we actually still staying bullish, or are we seeing a delayed protraction, some sort of weird movement where London into New York is taking those highs, which we did here at 830, and then we're looking for New York to never challenge the highs but to challenge the lows. So we see that this high of news gets defended, and we see this aggressive move down, and the temptation may be to think that this aggressive move down is this aggressive move down. But remember, Asia and London lows would be taken if price were to continue bearish. When this aggressive move happens going into the PM session, both London from midnight to 8:30 and Asia from 4 p.m. to 8 p.m., those lows were not challenged. So, given that we're still looking for bullish moves, now we have to shift gears into the New York profiles and see what could be the possible contenders. So this profile is out. We're continuing to think of ourselves as bullish, and we wait until the PM session, which kicks off at 1:30. So at 1:30, it's one of two things. We're looking at our AM range, high and low. So now we have our AM high, AM low. Which profiles would get us bullish after taking the AM low? And there's only two. So there's a AM decline, PM reversal, and then there's our consolidation profile. Now this one's a little bit tricky because this movement here in the AM session would not be considered bearish. I mean, this move happened at 12. This move happened at 12:50. So you're really in the lunch hour. So you're not really thinking of this movement ahead of in New York. So this here. AM session. So you're not thinking of any of that movement there as bearish, right? Like all of that just seems as either consolidation or bullish, if anything. So you wouldn't really have thought of this profile initially. You'd be thinking maybe a consolidation. Either way, once you get below that AM low, so you see that AM low at 9:30, which would be down here, you're still thinking of yourself as getting back to 9:30. You're still thinking in the PM session to see a rundown, taking an AM low, and then a bullish move out. And that's what we see. So whether you're looking at it as a consolidation or as some sort of PM reversal, you're still anticipating price to be bullish in the PM. Now, how you get in is a totally different topic, but we're just looking at merging profiles and the whole concept of how powerful ranges are to know if you're actually going to be pushing bearish or if you're really just retracing into a range. So we use the London midnight to 8:30 high and low. We used Asia, and we confirmed that because we didn't clear below either one of those in the AM session, that we're only looking for bullish reversals in the PM. So I want to also take a step back and look at, well, what about all of this price action could be supported or framed on the higher time frame? And this is where weekly profiles come into play. So let's zoom out. Let's take a look at what we've been looking at for the week. I might have to just delete those. All right. So for the week, we had a holiday, Martin Luther King Day, pretty much no trading. We set the Tuesday. We used all of our profile information for Tuesday, Wednesday, and then we're seeing this swing up going into coming out of Thursday. So let's jump up to the 1 hour time frame, and all the way over here. What we can see is that we've already got the basis for a weekly profile of what's called a Wednesday low. So a Wednesday low is where price will Monday through Wednesday be bearish, and then we start to see a reversal Thursday. So at this point, we can see that these relative equal highs, they're barely holding price up. So here, those relative equal highs are barely holding price back from continuing this massive bullish run. So once we see Wednesday dipping down, we check all of our weekly profiles and we see which one is closest to the one that we have. So this Wednesday low was an option, and certainly once we saw the overnight session on Friday kick above those relative equal highs, then we're thinking Friday I'm only framing my day on bullish plays. So whether you use the TGIF retrace, TGIF expansion, or you do something else, you go up to the daily. So on the daily, we can now see why we would even be bullish at all. And you look at this price action, you see your fair value gap, and you see now your order block. And when did that tag in? Go back to our 1.0. That order block tagged in exactly on Wednesday. And you can see how that fair value gap now supported price dipping into the order block, closing back above the fair value gap, using that fair value gap as now a new area of support, and then that pushes or allows the algo to run this Wednesday low profile. So merging all of those things is a journey. Not gonna lie, took me a while to kind of get into a comfort level with all of this, but you know, proud of where you've come. These journal entries are going to be helpful as you reflect back and solidify the model, and posting it online to encourage others to look into the profiles as well. So I love it. This is a visual aid for me. So dipping into this Wednesday order block, that's when price starts to spool or reverse the bearish momentum that it had starting off the week. And then you'd use your AM or London and New York profiles accordingly to start framing what combination of profiles would get me to a bullish scenario. What utilization of levels would get me to a bullish scenario. Last thing I'd want to just put in this journal is the new week gap is another great tool. Where did you go? New week gap, new week gap, new week gap is another great tool. Here it is. So let's just make this darker. This was an interesting week where we had a Monday session, we had an evening session. So Friday's 4:45 price on a 15-minute time frame and Monday's 9:30 price will create this new week gap from a regular trading hours perspective. And it is a bookmark in time. So a bookmark for the week. It's just saying where are you trending to or away from. And so, you know, in previous weeks when the new week opening gap was clearly, you know, down here and then price ran aggressively, we're staying bullish. We're going to stay bullish unless we trend towards that gap. Same thing here. When price was trending away, we came back up to it on the Tuesday. We resumed the bearish nature of price. We used that daily time frame to frame that order block. We then started to push above. Now check out when it gets back to that new week gap. As soon as it flips and closes above it, price fights around that area for a while, goes into Asia consolidation, dips back down into that gap, just a bookmark, right? Not a PDRA. And then what happens after for the rest of that week is price will stay consistently above that gap and start moving away. So there's always these framings in market mechanics that can help. And I find the new week gap as a bookmark for the week. Where is price trending to, away from, is going to help. And you can see how that plays out again. Textbook here gets back to that level. Random as always, classic ICT material, just random. But then moves away going into that Friday, and then you can see the leveraging of both the TGIF retrace, where price will sweep below it, close above it, revisit it to pick up orders, and then run again aggressively higher, closes above the expansion, retests the expansion, and then closes on the day above on the highs. So merging profiles from London to New York, going zooming out, looking at your weekly profiles, leveraging daily PDRAs, and then bookmarking the week using these areas of measurement or market mechanics like the new week opening gap or TGIF, all part and parcel of creating a model around profiles to then capitalize on it and, you know, hopefully make some money. All right, we'll do it again.